FirstRand, becoming home now, is a banking, insurance and investment group which includes First National Bank, Westbank and Rand Merchant Bank.
Indeed, the South African market leader now, I think you can safely say, with the largest market capitalization as well.
250.9 billion rand, PE of 11.6, dividend yield of just over 5%. That's a very nice underpin in terms of dividend yield.
Yes, and we'll see that throughout the South African large banking sector. This one, interestingly, is rated the highest of all the banks, so reflected in their better growth prospects. And they have historically very much grown much better than their competitors. So quite an interesting mix. They've got a nice franchises within the group, the FirstRand group. They've got the Rand Merchant Bank, strong investment banking presence in South Africa and Africa. First National Bank, by far the most innovative of the South African domestic banks. Westbank also very strong position in that capital lending book. So a nice collection of businesses, very strong management traditionally, and a very innovative South African bank.
Mm-hmm.
We own this one in the portfolio.
Yeah, we do. And interestingly, we bought it because we thought that the innovative characteristics that Lance is referring to were attractive. We thought that it was a new way of being in the world, millennials, because of course if you've got good technology and innovation, then you can drive down costs. People don't need to go to the branch anymore, etc., etc.
You're saying we thought. Does that mean that's past tense? You no longer think that?
Well, you know what happened then is that we bought them like a year ago. Then we got caught in the wood chipper of the potential sovereign debt downgrade here. Because remember, banks have to raise money from somewhere in order to lend it out the other side. And unfortunately, if the sovereign debt downgrade comes for South Africa, then the banks get automatically downgraded as well, and then the bond yields go up and they have to pay more money to the people that provide them with capital. So unfortunately, having bought them at $50 or something, they're now drifting around at 45. We've been going nowhere fast.
Is it time to accumulate more if you think that the banks in general are undervalued?
Well, I don't know. I mean, the point is, will they have a strong earnings rebound? I'm not sure that there's that much confidence that they will.
No, they most probably won't. They're cheap for a reason. The economic situation, would say, it's headwinds against them. So the consumers under pressure. The interest rate environment is increasing. So the story for the short term, let's say, isn't good. But I think if you look a little bit further out, it's not a bad time to accumulate these shares. Their PEs have come down, and also their dividend yields reward you for holding the shares, which is quite nice. You mentioned the dividend yield. That they are good across the board. They're well-run South African banks. So I think a good time to start accumulating these shares.
Noted, Paul.
Yes, look, and the sovereign debt grade, who knows? You know, maybe that's going to go away forever. Maybe it's going to happen in December. Who knows? There's a little bit of corporate caution around. I think people are being a little bit careful about big borrowings. So, you know, you see the PPC type scenario, and then companies think, oh, well, maybe we shouldn't build that.
I'm going to go back to Buffett. If you endorse his position in Wells Fargo, then the key here is to buy when others are fearful and to sell when others are greedy. Isn't that the appropriate adage?
I know.
Are
look,
we going hot
we're
or
always
not?
fully invested, so we really do believe that that is the case. But, you know, of course, one knows that sometimes those waits can take a very long time. But, yeah.
Hot or not?
Hot.
Hot,
Yes.
hot.
Hot for me. I think that price is good for these companies.